Good morning, guys, and welcome to another Full Transparency Trading Session where I'm your host, Sebastian, and today we're talking about what the market's possibly going to do come next week. But first, we're over here at my MyFunded Futures account. As you can see, I currently have $866 in this particular account. This is the one that I opened up on Friday, and I am on day one of 30 days of profitability to go towards live trading. And now here is the best part about how you make your way to live trading with MyFunded Futures. You only need to make $100 for that 30 days. Must have 30 days with at least $100 per day to go to live trading. And then once you go to live trading, it increases exponentially how much money you can pull out of your account. Now, in the beginning, when you're doing your first 30 days, you can only pull $1,200 out at a time for the 50K account that I have here. So your profit locks basically at $1,200 every time you make a withdrawal. Currently, 100% of my account has been used. 100% of my, because they have a 40% consistency program that they have in place here. I'm currently at 100%, but that's only because I traded one day. So in one day, I made $866. That's a great first day for the account. $100 over 30 days will give you the $3,000 point, right? Obviously, you can do better than that. You can do worse than that. It may take longer than 30 days or whatever the case is, because some days you're going to lose. Not saying guaranteed, but some days you might lose, right? So with that said, what does it take to be a good day trader? Let me log in over here real quick. Give me 1 second. Okay, we're logged in over here on TradingView now. What does it take to be a good day trader? Honestly, to be an okay day trader, all it takes is this. Log in. Wake up, log in, hop on here, find a bias on like the 15-minute time frame, and use decent risk management. Decent risk management will make you a profitable trader for just being okay. If you just want to be good, like a few $100s a day or whatever the case is, that's all you're looking to do, right? How to be a really good trader. If you want to be a really good trader, not just okay or whatever, not just making a decent amount, you need to master the 4-hour time frame. So the things that you did in the very first part, plus you need a mastery of the 4-hour time frame, okay, and the daily time frame if you want to have a larger frame of reference, and that'll make you a really good day trader. Once you master the 4-hour time frame and understand how to draw out supply and demand properly, you will do phenomenal with day trading. You'll get to that point where you're making $250, $300, $500 a day, all the way up to the $1,000 mark and stuff like that. How to be a great day trader, though, is where things start to get a little bit different. To be a great day trader, you need to build your vision up to the point where you have a seer level understanding of what the market desires to do, right? You can not only come in here, you don't come into the market with a bias. You don't come into the market with an opinion or a thought. You go in here, you analyze the weekly time flow, the daily time flow, the hourly time flow, the 4-hour time flow, and you say, okay, this is the trend of the market. The trend of the market is saying that we're doing this right now, or we're doing that right now. So if the day continues the trend, we're going to have a pullback and we're going to go down to a lower point. Now, what's crazy is while you're doing this, Friday, we had hit the $600 mark, right? And rejected right at the $600 mark, which is crazy because this is part two. What makes you a really good trader. This is just the mastery of the 4-hour time frame. I've gotten so sharp at drawing lines off of the 4-hour time frame, but how do you get to that next level of being great? You got to be able to predict what the market is going to do with relative accuracy. From the beginning of the day to the middle of the day. You no longer want it to be where you're like, hey, I'm figuring it out as it goes along. When I start my days now, I go, okay, the market should do this. If the market does that, my analysis was correct. If the market doesn't do that, my analysis was incorrect. But nowadays, I can go, the market's going to do this, and it does it with relative accuracy. Then that gets us to the next level. What makes you exceptional? What gets you to that point where you can make $1,000 a day easy? Where you're going $2,000, $3,000, $4,000 a day randomly. What gets you to exceptional? Where your year becomes a 5-figure, 6-figure year of day trading. You need to start implementing a plan. You need all of the things that I just taught you, a mastery of the 4-hour time frame, the ability to predict where the market is going. And now you need an accurate, consistent, and simple plan to execute on all of the information that you understand now. Okay? You should be able to see the flow by now. This should be year 1, year 2, whatever the case is. You should be able to understand how to read the trend of a market overall, how to read the range of a market, how to very quickly look at a situation and be like, okay, we're approaching a fair value gap. You don't need to know the terms or anything like that, but you need to be able to see it and execute off of it. Hey, we're hitting this resistance area right here. We hit that resistance area again. We go up to the next resistance area. I'll take a trade off that next resistance area. We break that resistance area and go to the highest point. That's where I want to get in. This is my entry. This is the majority of other people's entries right here. And this is the people who are at the earlier stages. They need confirmation, a lot of confirmation. So their entry is going to be below this blue line. All of these are solid entries. Great entry, fantastic entry, solid entry right here. Everything as you're going down is a solid entry. But the closer you get towards the finishing point of a move, the closer you get towards the reversing back to the opposite direction or ending up in consolidation, right? So to get to exceptional, you need to add everything together along with the ability to execute, a very strong understanding of risk management. Risk management is paramount at this point, and you need to start controlling your emotions. Okay, not letting them control you, not FOMO trading, not revenge trading, none of that stuff. And then you'll start to make thousands of dollars over the hundreds of dollars mark, right? And at this point, a lot of people can stop there and that's it. And that's fan-friggin-tastic. That'll make you a 6-figure a year trader, a 5-figure a year trader. That'll replace a job, whatever the case is, right? But there is another level. There's greatness. If you want to be great, I mean the absolute greatest trader you can possibly be, it takes obsession. It takes everything that I just told you, plus obsession. It takes foregoing things that distract you. It takes losing a few friends here and there. It takes having your heart broken because people don't understand why you want to do this, why people don't believe in you. It takes all of that. And it takes pushing through all that and putting in so much time, effort, and energy with the charts. That does not mean that you abandon your responsibilities. That does not mean that you neglect your family. That does not even mean that you neglect yourself or your friends, right? That means that you prioritize your learning and your understanding above everything that comes below family and handling your financial responsibilities. That means you spend more than 30 minutes a day on the chart. If you spend 30 minutes a day on a chart for 90 days, you will have 45 solid hours of trading on the charts. I have been trading for 3 years. I have over 5,000 hours already. Meaning that within the next 3 years, I should be hitting the 10,000 hour mark. If I do the math, which I will do in a moment, I'm going to do the math for you guys of how much time I've actually spent day trading. I'm going to lowball it just because I've spent even more time when the market wasn't open, but I mean physically trading. There are 250 trading days in a year. I trade almost all of them. Almost all of them. To be great, I believe you need to go against the conventional norms. I believe you need to trade holidays. You need to trade off days. You need to trade Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. You need to trade bad markets. You need to trade bearish markets, bullish markets. You need to trade consolidation. You need to trade everything because your understanding needs to be so damn good. It needs to be so refined, so tight when you see any situation coming. You need to be able to anticipate, react, or proactively act on that situation. It takes a lot to reach mastery. Now you can do it in 10 years, 1,000 hours a year. You can do it in 5 years. You can do it, people can do it in 3 years. It depends on how much time you have to put into this. But we're just going to go off of the 250 trading days. Let's say I only do 4 hours a day. That's 1,000 hours a year. But guess what? I wasn't just doing the trading days. I was studying in my off days. So in my first year, I did this. 250 days times 8 hours. 2,000 hours my first year. My second year, I did cut it down a little bit. I did 250 days times 5 hours a day because I was getting better. I had a greater understanding. I didn't have to watch as much. I didn't have to learn as much. And now I'm doing less, right? But more focused on the trading side of things. So in the beginning, first year, it was all about learning, all about understanding. I had 4 charts up. I had all this stuff going on, right? Hours and hours. I'd watch the market the entire day. Now I watch the market from about 3 or 4 a.m. to about 10 a.m. So about 6 hours a day trading off and on, right? But I'm not always looking at the market the whole time, which is why in the most current year, we're doing about 100 days right now times about 3.5 hours. So we're giving it about 350 hours to it so far this year. So then you add that 2,000 plus 2,000 plus 1,250. We're at 3,600 hours. So where did the extra 1,400 hours come from? All of the out of market trading that I did, the several months of the year where I'm looking at the market, just studying charts, studying Google, studying Microsoft, studying Meta, studying Apple, studying Nvidia, studying the entirety of the market, as well as going to class. So now you got another, let's say 4 hours a day. We're gonna do plus 4 hours. Here, we'll clear this out, 3,600. 4 times, let's say it's been what, 3 years now? 4 times 300. Adds another 1,200 hours to my 3,600 hours. So we're almost at 5,000 hours. And it's possibly more because I did spend 8 hours a day trading. Majority of the time I would trade the entire market every single day. But let's say we're at 4,800 hours in 3 years. Okay, let's double that to the 6 year mark. So we're gonna go plus 4,800. That'll put us at 9,600. So within our 6th year, we'll be approaching our 10,000th hour if we keep up a similar pace to what we have going on right now over the 3-year period. And if it takes 10 years, it takes 10 years. You don't have to finish your 10,000 hours to become a phenomenal trader. That's the coolest part. Right now, I'm a pretty darn good trader and I only have 4,800 hours in. But just imagine how good you were if you put in 1,000 hours or 2,000 hours or 3,000 hours from where you are right now. I'm never going to stop learning how to do this. It's always going to be something that I learn going forward. But with 4,800 hours in the books, almost 5,000 hours in the books, before I've even hit a fully canceling out the debt that I created for this year, that's dope. You know, and as you guys have been seeing, I'm getting better and better and better at understanding every single time I go into the market. Why do I go in every single day? Because every day is slightly different, but every day equates to the end of the week and equates to the middle of the month and the end of the month. Every day matters in the stock market. It all builds a story. Here we were. Let's go to the daily. Here we were right here. Every day being slightly different, right? But every day forming a range. So, undo that. Here it is. May 12th. May 13th, going up. May 14th, kind of consolidated. May 15th, pull back. Pushed all the way up. May 16th, that Friday, put up to resistance. Monday, breaks resistance. Guess what? Falls all the way down here. Actually fell down first and then went up and broke resistance. But then guess what? We formed a new low, breaking down. That means the market ended right here. All of that movement of the market ended right here. So we open up down there, ends right here. Guess what? Ended right there, falling lower, falling lower, falling lower. Guess what? We broke. We have to make up for these candle wicks. So we broke that candle wick right there. Then we started heading up. Boom. Consolidated in the middle. Pull it back. Head up some more. Back exactly to where I want you guys to recognize this. Start recognizing this. The market does the same thing all the time, just in different areas. So all of this movement up, the market stopped right here. Okay, the wick is just manipulation, manipulation, manipulation. Guess what? We filled those manipulations with all of this dead space. We fill those manipulations, right? But the market's been moving up, moving up, moving up, and you're like, well, where's the next solid place for it to fall back? Guess what? Right here at this red candle, body of a blue candle, massive fallback down there. Why? Because we have to fill this gap. So you always have to gap fill. But guess what? The orders start to shift up. We're gonna go single screen over here. Single screen, SPY. The orders start to shift up on the daily, right? And that's what you're seeing when the range changes. So here we were on the daily, lowest of low range. We're in the bottom portion of a past range, right? All the way down here, we had broken all of these levels. We had fallen all the way down. Why? Because we had to fill a gap that was way, way back here. We had to fill a gap that was from like January 2024. Once we filled the gap from January 2024, we immediately pressed up to configure all of this gaining. So we had been gaining since October 2023, right? We have been gaining, growing. The market's been growing since October 2023, growing steadily. We have a massive pullback very fast over the course of 2 months. We turn right back around in a month and a half. We're right back where we were. But you learn to read the market. Go back, look at it. Right here, resistance. Right here is resistance. Right here is support. It was resistance right here. It was support right here. It's gonna be support over here. So once you get that obsessive nature and you start to understand that the market does certain things all the time, you can plan your moves around the best possible portion of it. Okay, if we know that, hey, it's gonna go to 592.95 and drop, guess what? When we get to 592.95 over here, we're gonna play our hand to the downside. Does that? It goes up a little bit. If it doesn't go up to this area right here, let's say I'm protected to above that line right there, 594.26 if you're in options. Boom, I'm taking that to the downside. Guess what? It falls massively. It falls from 593 all the way down to 583, a $10 fall the very next day, right? Come right back in this thing. We go right back up $10 the next day. Then we break out to go higher. Guess what? Go back to the past. This area was a resistance area there. And this area was the highest point of that resistance area. So that's where we're going for the next day. Next day ends right there. That resistance area pushes right back down to support and then goes right back higher. Oh, guess what? The next area that it's going to is right here based off of this line. All right, so this line right here, we hit that, and that's where we're at right now. And so what's next? Obviously, we're trying to reach 610. We've reached $680, $600.83, right? We want to reach the next level, which is 602, followed by 605, being the next strongest area of resistance because you fill this gap completely. And then you're talking about 609, 610. And then once we hit 610, that is when the market can really take off. If they manage to keep things going, so let's say Tesla was down or whatever before Friday, went back up $10. If they manage to keep things kind of leveled off right now for the next week or so, we could see 610, we could see 605, we could see 615 breaking out to right here, heading on up to 620. You know, the goal that they're looking at is like a $650 SPY. Eventually, inevitably, they want to reach $1,000 on SPY like they have for SPX and stuff like that. But right now, the goal is just to get to that 620 mark. We've been to 613. You want to break that area, hit 615, and then you want to break that area and hit the solid number of 620, followed by 625. They love round and solid numbers for their stopping points. You see it all the time in the market. Market right there. Market right there. You see 50s, you see plain 6s, you see 20s. They love holding round numbers. But that's it. The market is still trending up. We're going to have another pullback day as always. We got to come on down to like 592. And then that'll allow us to carry on. The market is going to continue to trend up. You also have 584 as another touch point to fill these little gaps right here. So there's going to be some days where we pull back. There's going to be some days where we go forward. But the goal is for them to keep pushing it higher and higher and higher. And they ended at a beautiful point of 598, allowing them to start the week off pushing higher than normal. So if we pull back, it'll be to the support line of like 594 and 591. And then you have the lowest point of 590 right here. So we're officially in the 600s again. And we're going to see where we go from here. You guys have a great day. Thank you so much for checking out the video, and I'll talk to you in the next one.